It's a bear. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. The regular cams that I have up today are kind of a little cloudy in the water, so I went to a little North Florida to grab the live manatee cam. Pretty cool stuff here. Very relaxing to look at as well, just like the underwater fish cams that I show on a daily basis. And these are, if you don't live in Florida, these are the creatures they talk about were almost extinct for a little while. Very slow moving. Unfortunately, boats run over them quite often and often kill them or scar them pretty badly. Very gentle creatures too. I don't think they even have teeth. Interesting video here, so I thought you might like this. Well, let's move into markets today. Wow, what a crazy market that we got going on right now. Oh, there's my windjammer. Hey, let's take a look at the beach anyway. How do you like this weather? 52 degrees. Take a look at that. That almost looks surfable right there as well. All right, we're not here to talk about surf or manatees really, but I'd like to start the morning out with something cool. Speaking of cool, like I said, 52 degrees. How's that, my South Florida peeps? Time to put on the winter jackets. Gosh, look at these markets, man. They've just absolutely insane action this morning. I want to go over a couple things here. First, we're going to go over the gold and silver prices. We're going to look at the charts. I'm going to show you some really crazy up and down movements in precious metals today. There's something weird going on out there. Can't quite put my finger on it, of course I can't, but I'm sure smarter people than I will eventually here shortly. Let's take a look. We're also going to look at some other things, cryptos, the stock markets, what's doing this. Surprisingly, cryptos are getting pretty much monkey hammered today as well as like stocks are. I'm really surprised to see gold and silver doing pretty good and platinum doing good, and the rest of the market's just sucking wind. Or sucking air, whatever you want to call it. We're also going to look at the gold versus real yields. We're going to look at the CPI, and my gosh, the U.S. Misery Index just came out for Joe Biden. It does not look too good, but I guess we kind of expected that. We'll get into that, and then what else we'll get into? Good articles on gata.org. Something on ZH, and a little video we're going to watch, which is about 7 minutes by a gold specialist that talks about exactly what we've been saying, is that a lot of people shit on 2021 as being a bad year for gold, but you know, we had excellent 2 years. I mean, we ran up for 2 years. We expected a pause somewhat. And as far as silver goes, who knows what effect that Bank of America 800 million ounces that they purchased in physical from JP and in a lease type situation. Who knows what effect that had on markets? Did they dump it into the markets? Where did that go? Still something. I got to send Ted Butler an email and ask him where that, did they sell that through the course of the year, that silver that BOA bought or not? But let's take a look at prices here. Again, the action is really crazy today. And look at that low, 1806. Let me say crazy compared to what it's been. It's been kind of like a couple steps up, 3 steps up, 2 back, 3 steps up, 2 back, and then occasionally backwards a little bit. A lot of the action has been occurring in the New York markets for months now. In the morning, getting monkey hammered pretty hard, and then it rubber bands back up again. But as of late, again, we're going to look at the 24-hour charts. There's been really weird action going on in gold and silver before New York openings. I suspect it's in the Globex markets, but it could be the crooked London market as well. So we'll take a look at that after we look at the prices here. 1806.62, a high at 1823.27. We're currently sitting at 1817.71, just a couple bucks down. But look at this, all the white metals are up quite a bit, and silver currently at 23.47. Surprised the hell out of me, right? When I first started looking at the machine this morning, we were sitting at that 22.83. I'm thinking, look at that, monkey hammer. Not even in New York, monkey hammer before New York even opened. Likely, in my opinion, in the Globex markets, but it's possible that it was in the London markets as well. Hard for me to tell where these trades took place. And was it London? Was it Globex? Again, I keep asking out there, if anybody smarter than I knows how to see where these large trades that take down the price of gold or silver in the middle of the night or in these different markets happens, let me know. Because again, these markets do overlap each other. London overlaps the Globex markets. So how do you tell when a trade took place in Globex or in New York? I'd be curious if any of you know how to look up that information. Maybe it's right in front of my face and I'm too stupid to see it. Again, I admit my genius is in certain areas like physical gold and silver, not in charts and not in discovering things like that. So appreciate any help I can get. Chart guy, if you're listening, let me know as well. 22.83 the low, 23.54. Look at that high, 23.54, up 42 cents, which is pretty extreme considering that we haven't had these kind of up days in a little while. Let's see if it hangs on to it for the rest of the day. Platinum again, 966 the low, 984, $20 movement there in the green, and again, we don't talk about palladium. The exciting thing here, let's take a look at the charts. Look at that. I mean, that's just crazy. And let me show you kind of the pattern that we've been seeing is that here you go right here. There's your New York Open, of course, and there's your monkey hammering down. And what have we been noticing? But let's look prior to this as well. Look what happened in the evening markets in gold here, all right? Hong Kong markets are open right there. Again, I have a hard time telling. You see this downward line, that would indicate someone sold a large amount of gold or enough gold to kind of drop that market down like that. What I don't know is, did it occur in Hong Kong? You see that line? If we draw it straight down, I think it's actually before London. Does this trade right here that drove the price of gold down start in Hong Kong, or was it in the Globex markets? Or I don't think it could be in the London market. It looks like it happened before London opened. But Hong Kong or New York? How do you tell which market that trade that caused this down price right here to happen? Where was it, Hong Kong or New York? Again, any help that you guys can provide me with finding out this kind of data and information, I'd greatly appreciate it. Again, I'm not an expert in everything, and I'm trying to learn as I go, and I'm trying to teach you what I'm learning as well, so we'll all learn together. However, look, monkey hammered in New York, another pattern that I've seen happen over the last week or so. It's been about a week, maybe two at the most, where we've seen typically it's been getting monkey hammered in the morning, then it kind of drifts sideways. Then we've seen some pretty good up mornings as well in New York. That's kept it in this $23 range. There seems to be like an epic battle going on. I've been calling this the rubber band for the last 2 weeks because that's exactly what it's been doing. It's been getting monkey hammered in New York, and apparently now in the early markets. Again, if these trades are made, in my opinion, and people's opinions smarter than me, if this trade that caused this green line to go down this morning before New York opened, and actually looks like before London even, maybe it's right at the same time as London. Yeah, that looks about when the London market's open. But where did the trade take place, in London or New York? Globex. If it took place in Globex markets, we can pretty much rest assured that it's probably some crooked ass bid that was, or not bid, but crooked ass sale that was stuck out there just to fat finger the price of silver or gold down. I'm sorry, gold as well. However, tough to say. London is probably no better. A lot of crooked shit goes on in London, especially with the gold market, so neither market would surprise me. But I'd still be curious to know where the action took place, London or was it in New York, all right? And how do you tell the difference here, since it's a 24-hour market? Let's take a look at silver market. Just crazy. Not as monkey hammered as badly this morning, but take a look at that line. Isn't that some nuts right there? This morning, not too bad, drifting in that 2280 range from last night. It looks like, what the heck is that? It looks like it completely closed last night. That's a very strange line right there. Maybe I'm missing something. New York was closed. Oh, I say New York was closed. And they're showing, oh, that's right. Take a look at that action right there. But this morning, sorry, I'm talking to myself when I'm looking at this stuff, trying to figure it out as well. Let's take a look at this morning's action. Just insane. And this is obviously in New York. You see right off the bat, we've dropped down from below 23. I think it went to a level. What do we say the low was? Let's take a look here. A low of 23.83 and again a 22.54 high. And that's probably that's that 22.83 low here in New York. And again, it looks like it started in New York, drift downwards, and then wow, that's not even a rubber band, folks. That's a rocket right there. So rocketed up quite a bit, and now we're sitting at that 23.40 level. Let me do a quick refresh here. Good day for silver for sure. I'd sure like to know what's going on out there, because the patterns in these lines, the patterns in these charts has completely changed the last couple weeks. If you got any ideas or thoughts, what's happening out there as far as when the markets are getting hammered and when they're kind of jumping up, New York, and now we're seeing it earlier in the morning markets and then kind of flattening out during the rest of the day. New York seems like after 12 o'clock of late, for the last month or a couple months, after like noontime, New York kind of flattens out until the evening markets opening up. And it looks like most all the action that I can tell is happening from, what do they show here? Well, I think about from 1 o'clock or 2 a.m. our time until about 8 in the, well, to about noontime actually is when we've been seeing a lot of the action. After noon, it just kind of flattens out. Again, it's been strange action if you take a look at these charts here. Let's take a look at what's going on in the rest of the markets out here. I'm very enthusiastic about what we're seeing in silver. Is this the end of the lower 20 prices for silver? Tough to say right now, but I think things are looking pretty positive. And where are we going from here? Oh, I'm curious to see what's happening with stock. I was really surprised to see stock market. Not surprised, but you know, it's just a market that just continually seems like it goes up forever, and then it has a little correction, it goes up again. And every time we see these big down days, we ask ourselves, is this it, and then it's not. So is this it? I don't know. But look at Dow futures down quite a bit across the board, and as you can see, silver's up, gold's down a little bit, but silver's up, crude oil's up. This surprised me. I figured with the stock markets down that maybe cryptos would get a little love this week, but no, not at all. In fact, cryptos are getting pretty badly hammered. So crypto is acting nothing like gold and silver, not even close. And I know that for a long time they were making comparisons between gold and silver. It's not, folks. Gold and silver is about wealth preservation primarily, not getting rich quick. Bitcoin is a highly volatile casino that just, you know, the more people that jump into it and jump out of it, it's just kind of it's a casino, really it is. Highly volatile casino. But I got nothing against it. It seems like a fun place to make some money. But I believe that the days of making millions in Bitcoin for the average Joe are completely over. If you weren't one of the original guys in on the ground floor, like the guys that were on the ground floor of Apple and the guys that were in the ground floor of, let me think of all these great, Tesla and the ground floor of all these companies that are worth, you know, Google. If you had bought Google when it first came out, you'd be a millionaire if you bought enough of the shares. So my point is that, but the problem with Bitcoin versus Google and all these other early interests is Bitcoin is just so highly volatile right now, and it's just based on the popularity. It's based on popularity. The more popular it becomes, the more money it runs into. And the other issue they have is that the whales are in this, and it's pretty much over, folks. Trust me on this. Well, don't trust me on this. Trust your own instinct here. And as I said, always question authority. That's my meme and theme for the year. Always question authority and think for yourself. Timothy Leary said that as well. Let's look at some charts here, I think, that are very interesting. I pulled up the January 2021 to a 1-year chart on the gold versus real yields. And take a look at this here. You can see that chart, the shrinking. Treasury yield is at minus 7.4%. And where is it? And gold's currently sitting 18. So this is over the course of the year, and let's see where gold is and where it touches here. 1907 Treasury yields around 0.85%. And as the yields seem to rise, the price of gold seemed to go down a bit, but nothing substantial. Look, it kind of stayed the same there. Where do we get a little bump downwards? I kind of still really believe, honestly, that the gold versus real yields and treasuries is a bullshit narrative that's been painted for a long time. I sincerely believe that gold versus real yields was an important factor to look at when and if we were given real inflation figures. You know what I'm saying? You know, if the inflation figures were real. But and if, you know, again, if a treasury or bond is paying more than what the inflation rate is and more than what the cost of the bond and everything else that goes into that stuff is, and you're making real yields on bonds and treasuries, why wouldn't you get out of gold and silver? But the fact is that they're not. They haven't been for years and years and years. I think the only reason that gold gets pretty much monkey hammered is because of this false narrative that's been painted for years that the real yields are genuine, based on genuine numbers from the CPI and the inflation reports. But they're not. They're not. It's a negative yield. It's been negative yield for years, I think. So I believe what happens is I talked about this in yesterday's video, is that they monkey hammer the price of gold down by every time the Fed comes out and says they're going to raise interest rates. I sincerely believe, I don't know who, but I sincerely believe some of the big commercial banks, big traders, GATA.org believes that it's government, that are causing these big downs in the price of gold. Using JP and using big commercial banks to do their bidding. But that's a whole separate story. You know all about this. And I believe they use this data, and as soon as Fed's going to jawbone higher interest rates, they go in and they fat finger the trades, or they spoof them, or pull out a huge short contract and drop the prices of gold down to coincide with the Fed jawboning. Again, I don't think that there is any legitimate reason why someone would want to put their money in treasuries when it's a negative yield based on what the real numbers are actually showing us, not based on the bullshit that they give us. Sorry, I didn't mean to make that a long-winded explanation, but I'm still understanding this stuff myself, folks, to be honest with you. I'm no frickin' genius when it comes to all this stuff. I'm learning from GATA.org, I'm learning from the Ted Butlers, I'm learning from the other writers out there. So I'm learning this stuff as I go as well. So if you hear me repeat something or I kind of screw it up a little bit, I'm learning with you, and I'm trying to teach you what I'm learning as I go, like I said. I just said that 3 times. Oh my gosh. All right, consumer price index for all urban consumers. I tightened up this chart. 2021, what was that? January to, let's see here, 2021, 12, to 1 month. That's basically a 1 month chart right there. Look at that. That's just depressing. In 1 month, look at the purchasing power of the consumer dollar based on this government figures right here. This is their own figures. And again, if these figures are probably skewed to the upside, the numbers probably look a lot worse than this. But this is 1 month, folks. This is just plain freaking scary when you see the value of your dollar dropping considerably in purchasing power like this. I mean, let's take a look at the max chart and see what that looks like. Look at that. We're just in an accelerated a spiral downward, I guess. But we're in a very low point in our history as far as the buying power of the dollar. Maybe we're ending the ending of this particular form of the dollar. I don't know. That's a whole new video, and I'm sure there's tons of them been done out there. Here's what surprised me. Not surprised me. I've been waiting for the new figures on, what is it, the United States Misery Index. How miserable do you feel? This is a real index, been around for a lot of time. You can do it by year, by president. However, they just released the data for this president right here, and as you can see, there's Clinton. We are ranging into different areas here, 7.35, and where we go, George W. Bush got up to 9.65, Obama as high as 12.1. But this makes sense. This is probably after the financial crisis right here. Trump at 9.35, and Biden right out of the gate at a misery index of 10.06. That's starting on some pretty high numbers. He's still much higher than the Trump administration here. Let's take a look. 10.6%. He's still got a ways before he gets to the misery index of Obama and a few other presidents here. But man, right out of the gate, that's not a good thing. 10.06. I suspect that this is done in quarters, so I suspect the next quarter is going to even be worse for Biden. In fact, what you want to do an over and under in comments down here? I'm going to put the over at what am I thinking? 15, how's that? And I'm gonna put the under like around 12 on his next quarter, but not very good, not promising. If we look at this, if we look at all this data, folks, man, this is not, why don't they talk about this on corporate news instead of the bullshit that they spin all the time? I don't know. Maybe they just don't want us thinking for ourselves. GATA.org. Some good articles out here I'd like to point out, and I don't use the word homework anymore. Sorry about that. I've been using the word suggested reading. So I'd like to give you some suggested reading out here. This is a good article here. JPM Goldman Sachs got $8 trillion in emergency loans in Q4 2019. Not a lot of people know this, but our financial system was on the edge in 2019 before the big critter 19 nonsense came along. We were in serious financial trouble. Our banks were, JPM, Goldman Sachs, I think Citi was in big trouble as well. Worthwhile article to read here. It's something I've read a couple times. I knew about this, but not many people did that, basically the Fed was keeping a lot of these banks on life support in 2019, which also makes me wonder, isn't it coincidental when all the shutdowns happen? Here's my conspiratorial mind going into work. Maybe the shutdowns were to do with politics and economics, not with the not with the critter 19. Maybe it really had something to do with some really bad economics coming up on the scene in 2019 or for 20, and some really bad political stuff. Them trying to knock out political opponents, all kinds of nonsense. Maybe that's why we got the closures. Maybe it had nothing to do. Maybe it was a combination of things. But no less, that's my mind racing 1,000 miles per hour, wondering about stuff, wondering about questions that you'll never see in corporate media. Why? Because they never question authority and they don't think for themselves. That's what we do, folks. We question authority and we think for ourselves. And question ourselves as well. Treasure Hunter Strikes Gold. I'm going to start doing coin videos too. I'm a rare coin dealer. I've been doing this since I was a kid. I know this stuff real well. I've been asked to do it, but I do these daily videos on gold and silver. So when I'm done with them, I'm like, okay, I got another one done. You would think it's hard, but it's hard to every day do a video for 2 years straight. I haven't missed a single one either. Only times I've taken days off were for these videos has been holidays, like Christmas and the official big holidays. Let's take a look at, and maybe I'll do coin videos. I want to do a video about grading services and about modern commems and that kind of stuff. Maybe I'll do that one first. All right, meanwhile, let's talk about our gold and silver. Americans stampede into inflation-linked bonds, smashing records. I talked about this week how they have an I bond that pays 7.15%. You can only spend up to $10,000 per person per year, which is very odd to me, but no less. That kind of tells you if the government has an I inflation bond for 7.15% payout for the first 6 months or something like that. And what does that tell you about inflation? It's got to be much higher than 7%, that's for damn sure. I have seen that some people way smarter than I do that do these kind of numbers say that we're closer to realistically we're closer to a 15% inflation rate here in the U.S. Let's take a look at what other articles out here. Euro catastrophe would explode the European Union. That would, of course, would be very good for gold. Didn't care for this article, maybe because of the titles, but Big Macs may get to 2,000 before gold does. I don't think so. But anyways, let's take, I should read it, but no, I didn't like the title. But, it's worth probably reading here. It's probably not even what I'm thinking it is. As I suggested reading this week for you folks should definitely be gata.org. If you're not familiar with who they are, they're the people that had talked about how the government has suppressed the price of gold for years and years and years, and they explain how it's done, the basics, confiscation, all that stuff. You should read this. Definitely bookmark this site. There's always good articles on here. If you're a stacker and you don't have this site bookmarked, then you're not really getting all the information that you need to make wise choices in your stacking. Let's take a look at Zero Hedge here too. Just crap news. One little article here I want to talk about. It's not even an article. It's a Goldman plunges after trading revenue miss. Maybe this is the futures tumbles global bond yield surge. Maybe this is it. This is it, folks. Is it? Maybe this is it, folks. As far as wow, down 550 points. Whew. Well, let's see what kind of rebound they have tomorrow, if there is a rebound. But maybe this is it. Maybe this is the big decline that we're going to see in the equities markets. I don't know. Well, let's move over to here, back to ZH here, and that's great. Absolutely, that's great. Kiss my and apologize after they admit Just crazy times, man. These big companies out there, these big social media companies and media companies, corporate media companies, have really been sinfully bad the last couple of years. I mean, horrible, horrible. I hope most of them go out of business, but that's tough to say since I'm putting my videos on one of them. Oh well, use them while you can. Let's see what else is going out here. Series of unpredictable things. There was a good article down here by VBL. I'm not even going to try to find it, and I'm going to kind of just click on it here because it's something worth listening to. It's one of the gold analysts, and Yahoo invited the gentleman on to talk about what they felt the gold prices were going to do. It's about 7 minutes. Bear with me because if you've seen it already, just fast forward through it. If you haven't seen it already, I really do recommend the watch, and I hate to just turn a video on and have it play. But here we go. Let me turn that on, make sure the volume's up for you. And of course, it's not playing for me. Oh, you get to see this live here, folks. My embarrassment live. Let me see if I can just refresh that screen there, and maybe I can get that thing to replay. And here we go. I think so. Let me just turn that volume up.
In 2021, the yellow metal was closing in on its worst year of performance in 6 years as investors flock to stocks and crypto. But will gold brighten up a bit next year? George Milling-Stanley is State Street's head of gold strategy and joins us now. George, nice to see you this morning. Thanks for hopping on. Do you expect a rebound in gold next year?
Yes, I think that we're going to see better performance than we've seen in 2021. I think to put 2021 in perspective, it's important to remember that gold was coming off 2 banner years. The price went up 18% in 2019.
Correct.
It went up another 24% in 2020.
Correct.
Both of those figures are way ahead of the long-term average capital appreciation in the gold price, which is around 7.75%. So we were running way ahead of ourselves for obvious reasons. So something of a slowdown in 2021, I think, was to be expected. My sense is that as economies are starting to recover, we're starting to see a rebound in the all-important jewelry consumption.
Okay, real quickly now, forgive me for pausing that. I hope this thing runs again. There we go. When he talks about jewelry market, a lot of people, and I don't want the new folks out there to confuse jewelry with what you and I wear. He's talking about jewelry sales in Asia and India, where they don't really buy bullion coins and bars. They buy jewelry. That's how they hold their wealth, with jewelry. So the large sales in India that are considered jewelry sales, really in the United States, they would be considered bullion sales. So sorry for interjecting there, but some folks are not familiar with that.
Mostly in the emerging markets, and that is absolutely key to the health of the gold price going forward. It's typically more than half of each year's consumption. So I think that's going to be one of the kickers for 2022, Brian.
And George, I was also looking at fund flows in and out of the GLD ETF, which of course is the benchmark ETF for gold. And we have seen, if you look at sort of the moving average here, we've seen on balance this year some money come out of that GLD ETF. But I'm curious, as you talk to clients, consumers, what have you, how people view gold at this point in their portfolio, and if that view of the role that it plays has changed at all.
Okay, let's address the outflows first of all, Julie. You brought that up. We've lost about $10 billion to redemptions from GLD in 2021 so far. But that comes after a year in 2020 when we were up $15 billion. So we're still running pretty well if you take the 2 years as an average. As far as where investors see the gold in their portfolios, I think most people are still seeing it. They still believe that gold is offering them some protection against the unexpected, whether the unexpected is macroeconomic or geopolitical. There's still plenty of potential for the unexpected to keep cropping up. We haven't seen perhaps as much in 2021 as we did in the previous couple of years, which was one of the reasons why gold was a little quiet this year. But I'm still expecting to see uncertainties, especially around equity markets. We've seen equity markets.
And voila, Is today the day that we're going to see the uncertainties kind of pop up their ugly head? Is this where gold and silver is going to start taking off? I don't know. So, but again, I have to agree with this gentleman 100% on all this stuff. One of the better experts
closing
and
the year
talking
by
heads I've
hitting
seen.
new highs almost every day. That's wonderful news, but it's also something that makes me wake up at night worrying about how much longer that's going to continue. If we're going to see more uncertainty in equity markets and we're going to see continued low interest rates for the foreseeable future, there's no suggestion that the Fed's going to be in a hurry to raise rates.
Correct.
Then I think gold is probably going to do better next year than it has in the years so far.
George, perhaps you could settle this debate.
And this is exactly what we've been talking about on this video for years, the Fed jawboning. They're not going to raise rates anytime soon. And the rates they may, they're out of ammo, folks. When they lowered the rates, they can only go into negative rates, and I don't think they wanted to do that by any stretch of the imagination. So they had to pump it up a little bit. In fact, I think that it's very possible that we could see interest rates lowered again this year. It's tough to say. We're in a weird environment with inflation. We're in a weird environment where the Fed is trying to take care of this equity markets, which is addicted to this low interest, cheap money. Well, let me just let this continue. We're almost through it, so let's see what else.
We have it a lot here. And do you think gold is competing with cryptocurrencies for investors?
Not really. There's a lot of discussion about this in the media, but I'm not hearing it in the real world of investors and the advisors to investors that I spend my time talking to. I think the two things have rather different characteristics, and that means that it's not really a competition.
Bravo, bravo. I love hearing that. That's kind of what I started saying a couple years ago, and I've said it ever since. It's not competition. They're like apples and oranges. It's just two different things. It's nice to hear one of the experts in gold out there say this stuff here. Give me 1 second. Let me start that again.
You think about it, the contribution that cryptocurrencies make to portfolio performance is based entirely on returns. And as we know, returns can be positive, which is wonderful, and returns can also be negative, which isn't quite so good. And we've seen both of those from all of the cryptocurrencies in the short time they've been in existence. By contrast to that, gold's promise to investors historically has always been twofold. What we expect from gold is that it will, over time, it will improve returns, and that over time it will reduce risk, reduce volatility in the overall portfolio. Cryptos in the 13 years they've been around have actually increased volatility. Their volatility has been 8 or 9 times more than gold over that short sample.
And does this sound familiar? This is something that we've discussed over and over, the volatility of cryptos. And as far as wealth preservation, doesn't seem to be the right place to put any long-term money. Definitely not wealth preservation, in my opinion, a highly speculative market that's highly volatile.
Time frame. It's all we've got, so that's what we have to judge on. So they've been adding to volatility.
And I'm sorry to jump in here again. He talks about the time frame. We've talked about this many times ourselves. The time frame, gold's been around for 5,000 years. Cryptos since what, 2010 maybe? They just don't have a historical track record. Does that mean that they're going to disappear? Probably not. It'll be instituted into our markets somehow. And as I said, I've always expected the Fed to create digital money so they can, governments will start to get into the digital money so they can control us more.
They have added to returns, but they've really only done a one-dimensional job. I think that cryptos have a future, there's no question, and that when their returns are good, then people, I think, will continue to buy them. But I don't think people are switching out of one asset and into the other. I think that, if you like, they're complementary rather than in competition to one another.
Nice job.
Right,
Bravo.
as you say, it depends on what the motivation is, what they're holding them for. One of the motivations traditionally for people to hold gold is as an inflation hedge. And obviously we have seen inflation here in the US and around the globe tick up pretty significantly this year, even if it hasn't benefited gold, though to your point, over the 2 years, it looks different. So what happens next year as inflation is still predicted to increase, albeit perhaps at a lower rate? Will that be one of the things that draws people back to gold, perhaps?
I think it might. I think that, inflation is always, it has an odd impact on the gold market. If inflation seems to be going up, then people naturally turn to an asset like gold that has some real value and that has in the past offered some protection against sustained high inflation. But we've only had high inflation for 5 or 6 months. That is not, frankly, long enough in my time frame to call that sustained. I would look for at least a 12 months or even longer. Now, if we continue to see inflation figures around the 5 or 6% per year that we've been looking at for the past few months, especially now that those in authority have decided that it is no longer
Stuff we've been
right
talking
to
about.
call that transitory, so they're looking for more longer-term inflation, then I think that gold is going to benefit from that. But there is all the fear that investors have that if inflation is too high or rising too fast, either one or both together, then the Fed is likely to move rapidly.
Very interesting video, and I got to thank VBL. I think
I'm crocheting.
I see
oh,
that.
Give me one
And
second.
I don't want.
VBL posted that. Actually, I saw it on Zero Hedge, and that's where I found this video posted by VBL. But I'd like to thank VBL for bringing that video up. And it's very interesting to see a corporate news like Yahoo News, mainstream corporate news, actually have a intelligent talking head on their, or an intelligent person speaking about gold and silver on their show. You never see that in Bloomberg, Wall Street Journal, or you don't see that in CNBC or Fox Business or any of those. Usually they get these idiots that have no clue what they're talking about. So very refreshing. Thanks for posting that, VBL. Valancy Pictures. Appreciate that very much. Well, let's take a look at yesterday's video here. Hope you enjoyed today's video. Time for war, and I got a little bit. I got a little bit passionate about what I was talking about yesterday. But this thing going on with Ukraine is such bullshit. I believe that this current administration and a lot of these administrations worldwide that would be called somewhat left or Marxist, let's call them for who they are, but socialist, Marxist, that they're trying to push for war with Russia. It's to take the attention off the bullshit that they've created for the last several years, particularly the last couple years. So I really believe that the drums of war are kind of beating. They're screwing with Russia pretty badly. Yeah, I even had a friend of mine yesterday talking about Ukraine. I'm very, very familiar with Ukraine and what's going on there. Not many people know it, but they had a coup in Ukraine that the United States was involved with. That's why they got this new president. The old president was elected, fairly elected, tough to say, but they were elected by Ukraine standards. That president, he was a Russian guy that sided with Russia a little bit more than he sided with the EU. And the United States basically, and I think it has to do with an oil pipeline they want to run through there or something. I don't know what the hell is going on, but the United States, in conjunction probably with the EU, basically overthrew the Ukraine government, got the president out of there, installed a new president who they have today, whether you like or hate the guy. The only reason there was a regime change there is because we did it. It's a fact. It's truth. And the Russians saw what we were doing on their border with their neighbor Ukraine, who once was part of Russia, part of the Soviet Republic. And they said, no, we're not going to let this happen. We see exactly what the United States and Europe's trying to do. They're trying to install a puppet government and put weapons on our border and take advantage of the oil that we have down the Crimea. So the Krim is what I've heard it called as well by Russians, the Krim. So I'm going to call it the Krim. So the Russians kind of rolled into the Krim, which was a tactical smart move if you really think about it, because there's a lot of oil. It's a port that's right on their border, basically, and it has a long history of Russians vacationing there as well. So what a lot of people don't know about Ukraine is that it's kind of split. You've got the people in, I think it's Kiev. You got the people up in the northern, I think the northeastern part of the country. I think it's the northeastern part, would be more aligned with the Europeans, and the people along the border with Russia are mostly Russians. You remember the Russians, there's really not a Ukraine people per se. All right, Russians occupied and have been in Ukraine for hundreds of years, hundreds and hundreds of years. So basically, it's and the east side of Ukraine too. They had back and forth business with. So more or less, it was a coup that the United States threw down there. Russia saw what was happening, and now what we got going on is that you've got the UN, you've got the European Union, and the United States trying to place weapons in Ukraine and missiles and weaponry. Now think about this. You can't blame Putin and the Russians for not wanting weapons on their border. Look what we did when they did that with Cuba. When they put, can you imagine today if Russia came in, or China, let's use China for example. Can you imagine if China came in and created a coup in Mexico, Canada, let's just pick your country, or Cuba, created a coup, threw out the existing president and put in their own president that would be friendly to them. What do you think the United States would do? First off, we probably wouldn't even allow that to happen. So that's what happened to Ukraine and Russia. United States had a coup. We installed our own people in there that were friendly to us and friendly to the Europe, all right? And Russia's looking at this going, what the F? Now, and the fact that Russia didn't go into the capital, which they probably should have, which is a poor tactical move on their part, they should have just kept the elections intact and put down the coup that was happening, but they didn't. So, and probably for good reasons as well. I don't know what, but probably they were worried about war, as they should be. So, so then all of a sudden, now you've got Ukraine owned by U.S. and European friendly forces, let's just say so to speak. Now the United States and UN wants to put weapons inside Ukraine, which sits along the Russian border. Again, that would be no different than if the Chinese or the Russians overthrew Canada, Mexico, and then started putting weapons along our borders. We wouldn't tolerate it. We would not tolerate it. So why, what hypocrisy do we have that makes us think that we wouldn't tolerate it, but they will? Really? And the fucking idiots in this current administration, the fucking idiots in Europe, these Marxist, socialist, so-called liberals are not anything but liberal. They're fascist, in my opinion. Are trying to restart a Cold War with Russia. Really? My gosh, folks, if you live anywhere in the world, in the United States, elsewhere, get rid of these fucks that you have in office right now, because they're going to drive you to a war. And in my opinion, they're doing this just to keep the attention off themselves as well. War is good for doing that. Once you're in it, you kind of stop paying attention to the other stuff. We don't need it anymore. Anyways, oh my gosh, I went into a long, sorry about that, but I wanted to explain my whole opinion on that. It's not that, you know, it's not that I love war. Let's take a look at the comments from yesterday. Man, lots of them out here. I'd like to thank everybody out here. Let's see if I can see any long video today. So let me see. Wow, lots of comments on here. If I can, war is a racket, that's for sure, Joey. And war is ugly. And I think a lot of you agree with me on this as well. And, oh, Decepticons are bad guys from the Transformers. That's where I remember Decepticons. I used to watch that with my nephew when he was a little kid. He used to stay at my house once in a while. I'd turn on the Transformers for him. Hey, yeah, we're in big trouble out there, that's for sure, Jason. And thanks for your comments there, and thanks for watching. Whack-a-mole, yep. Again, I like to thank everybody that's watching. Clifford, all you folks. I really appreciate your comment, and I appreciate you watching. Right now, I'm kind of looking for any questions or comments regarding yesterday's video. Interesting stuff there. Here it comes, folks. You want to watch what happens as the U.S. stops operating in L.A. County? Yeah, I like monkey hammering too. Give me 1 second. I'm kind of looking. Wow, not too many questions. A lot of compliments. And again, I'd like to thank all of you for your compliments. I'd like to thank all of you for watching, for sure. And monkey hammer merchandise. Oh yeah, monkey. Someone says I should get monkey hammering merchandise. Oh yeah, I didn't. By the way, I didn't make up the term monkey hammering. I'm going to give credit where credit was due. I read it in a ZH article years ago, and I'm not sure who wrote it, but the term was being used to describe equity markets when they were driven down, not really gold and silver markets. So I did not invent the term in any way, shape, or form. Wouldn't take credit for it. Actually saw the term on ZH, can't remember from where, but it was used in equities, and I said, man, this is a perfect term for gold and silver markets. So maybe I can be credited with using the term for precious metal markets, but no, I didn't invent the term. But it works. It works. Spread to Silver Apes. Nice to see. Thanks, Akeisha. Appreciate that. Rush Arena, fire tender, asked me, hey, what's up from Ecuador? Beautiful country. I once had a friend from Ecuador, and I always wanted to go visit. Good surfing down there, too. Following up on fireproof safes, I think you had mentioned this a couple times. Decimated found car engines melted at temperatures way beyond normal fires of that sort. So I don't think a cheap safe would work, but I did go and look, and from what I could find there, sir, a good, what do they call it, Class A4 safe will hold up to 4 hours in 2,000-degree temperatures. Now, would the outside of the safe start melting? Yes, possibly. If you had paper money inside that safe, might it combust? Possibly, or turn to ash? Yes. But even if you had gold in that safe, it would still probably, worst case, is melt into a pile. But I'd say 4 hours at 2,000 degrees is plenty of again, what does a fire get to? When you saw cars burn to the ground, you got to remember, cars basically, there's magnesium in cars, there's a lot of plastic in cars, there's a lot of fluff, and gasoline too. So it would stand to reason that maybe a car would kind of melt down before you would see a house do the same thing. Tough to say, though. I'm not an expert in that stuff. And thanks for your comment. Made me look. Appreciate that. And okay. Well, anyways, let's see here. We are in World War II. It's different kind of war information, cyber. Absolutely true. Also, bioweapons are being used on well as tech. Their systems crumbling. Wow, very interesting there. I will get to that. Thanks for commenting, Bill. I really appreciate that. And P.S. says he heard from another YouTuber that if you want to sell bars, the shop has to report it. Not true. Bars and coins are exempt in the state of Florida. How do I know? My father, myself, Nick Hauser, and a bunch of other dealers actually helped write those laws to get coins and bullion exempt from the stupid holding periods, by the way. However, I believe, and if I'm correct, if you own a second-hand dealer's license or you own a pawn license, they want you to hold everything you have. However, coin dealers are not required, providing they're not a pawn dealer and they don't have a pawn license, providing they don't have a second-hand dealer's license, they are not required to hold gold or silver coins or bars, period. All right. But again, if they sign up and get that second-hand dealer's license or they get the pawn license, then they are required, according to the licensing, to hold everything they buy. I believe maybe even coins too. Pawn shops have to hold coins as well. But coin shops are exempt. And if some state or city in the Florida or county is making it a harder exemption, I would take their asses to court and I would definitely win for sure. I'd throw everything at it and I'd make sure I loaded up their city hall room with a lot of people there. Well, I think, thanks for that comment, P.S. I appreciate that, and thanks, man. And I think that's really pretty much it for the day, folks. Let's do a quick look at gold prices and just see where they're at, after this. And up overall, it looks like it's going to be a good day for precious metals. What's happening in equities before we close out? Looks like oh my gosh, it's going to be a bad day in equities, and cryptos are, cryptos are hemorrhaging as well. Hey, good day for us gold folks. Keep stacking, and as you know, I'm Brian Kuzmar, second-generation dealer. Been doing this since 1977, been in this location since 1995. I'm a brick and mortar only. We only advertise to deal with local folks down here. So if you don't live in my area, unfortunately, folks, I don't do any shipping or online sales. I may in the future. I might partner up with someone and do some online sales, maybe in the future. Meanwhile, I'd recommend that you deal with someone local. Find a good local dealer. Keep that money in your state, your city, or your town if you can. And if you don't have anyone to buy from, then maybe you do need to buy online. But I advertise to beat APMEX, SD Bullion, JM Bullion on all their reasonable priced products in precious metals. And your local dealer should be able to do the same. Well, that's really about it. I'd like to thank everyone for watching. Have yourself a great day, and I will talk to you tomorrow. Bye now.